Good morning, students. I hope you memorized the journal entries given in the previous 3 videos. Now we go for the next stage. I explained to you many changes in the application, allotment and call stage. In application, there is a oversubscription and under subscription. In allotment, the pricing is more than or less than, that is issued at a premium, issued at a discount. And in the call stage, there is a calls in arrear, calls in advance. I am here bring the meaning of calls in arrear once again. So calls in arrear means non-payment of calls. After giving the several notice by the directors to the shareholder, the shareholder did not obey and they did not pay the call amount. After some times, the directors will take some kind of decision. So the directors take a decision to cancel the share of those who are not pay the call amount. Such cancellation is called forfeiture of shares. When forfeiture take place, 3 transactions will be taken into account and journal entries are passed for the transactions. What are they? First one is you have to cancel the shares those shareholders who did not pay the amount. Second one is you need not to keep all cancelled share in the company. It should be reissued to someone else. So you reissue the shares. After cancellation, is there any profit on cancellation? That should be transferred to general reserves. So 3 journal transaction will take place after cancellation of shares, after forfeiture of shares. One is cancellation entry, another one is reissue entry, the third one is amount transfer to profit transfer to general reserve. These 3 entries should be adopted. I will explain how the journal entries will be passed in case of cancellation of share. It depends on the method of pricing, whether it is issued at par, whether it is issued at premium, whether the shares issued at discount. So based on these 3 conditions, we have to pass the journal entry for cancelling the shares. If the shares issued at par, then you have to pass a journal entry, share capital account debtor to calls in arrear account to share forfeiture account. When you are receiving the application allotment first call money, share capital account is credited. Now it is reversed share capital account debtor to calls in arrear to share forfeiture. Here share capital account is debited only for the called up amount. So what is the called up amount? Say for example, share value is 10 rupees. You collect 2 rupees on application, 3 rupees on allotment, 2 rupees on first call and 3 rupees on final call. The shares are cancelled for non-payment of first call. You assume that first call. Now how many the directors issue notice to pay the amount up to first call, not second call. Second call is not called for payment. So the directors stop the notice to call the amount up to the first stage. So the called up amount is application amount is 2, allotment amount 3 and first call amount 2. So total 7 rupees. So share capital account debtor 7 rupees. Now the calls in arrear account credit. How much amount is written in the credit side? Here what actually not paid. So the first call amount is not paid. So first call amount rupees 2. So you write 2 rupees in the calls in arrear account. Remaining to share forfeiture account. Share forfeiture account means the amount actually received from the shareholders. So it is a profit. It is a profit of the company. You need not return back to the shareholder. So it is taken as a profit, and the profit are all kept in the account, share forfeiture account. So here share forfeiture account is credited 5 rupees. So called up amount is 7, 2 rupees calls in arrear. So remaining 5 rupees received, that is 5 rupees received is a profit, and it is credited in the share forfeiture account. In the same way, if the shares are issued at a premium, you have to pass journal entries. Here there are two options. One is whether the premium is collected or premium is not collected. If the premium is collected, premium is a profit. The profit is not returned to the shareholder. So you need not cancel the share premium account. But at this time, when the premium is collected, you pass journal entry just like the journal entries passed in the issued at par. That is a share capital account debtor, calls in arrear account debtor to share forfeiture. So this entry is passed at the time of premium is collected. If the premium is not collected, the profit is not collected. So that means you have to cancel the profit. You have to cancel the profit. Now you have to pass the entry issued at a premium. That is a share capital account debtor, share premium account debtor. These two are profit items or credit items that should be reversed debited, and two calls in arrear account credited, and two share forfeiture account credited. Here the share capital called up amount is already I give the example 7 rupees. So share capital account 7 rupees. Share premium is 1 rupee. Suppose it is issued for 10 rupees share, issued for 11 rupees. So share premium is 1 rupee. 1 rupee is debited. Here calls in arrear account, the first call amount is not paid, 2 rupees is added, written in the credit side, and remaining 5 rupees must be entered in the remaining 5 rupees is entered in the share forfeiture account. Here is share capital 7 rupees, share premium 1 rupee, so total 8 rupees are debited. Calls in arrear 2 rupees, share forfeiture 5 rupees, here 7 rupees only credited. So that means the premium is not collected. That is also taken as a calls in arrear. So you must add calls in arrear 3 rupees. So 2 rupees first call amount, premium amount 1 rupee, total 3 rupees. The 3 rupees taken as a calls in arrear. Now I repeat once again, share capital account 7 rupees, share premium account 1 rupee, calls in arrear 2 plus 1 3 rupees, share forfeiture account 5 rupees. Then we go for the next stage, issued at discount. Issued at discount, the discount is a loss, the loss should be cancelled. So the same way, share capital account debtor, 2 share discount account, 2 calls in arrear account, 2 share forfeiture account. At the time of issue, share discount account is debited. Now it is credited. We make a reverse entry. So share capital account. Here the called up amount is 7. The called up amount is 7. It is issued for issued at 1 rupee discount. So discount amount to 1 rupee. Calls in arrear 2 rupee. Remaining share forfeiture account to 4 rupees. So you have to write like this: 7 rupees called up amount debited in the share capital account, 1 rupee share discount account, calls in arrear account 2 rupees, share forfeiture 4 rupees. Here the amount received is reduced. 5 rupees. In the previous cases we recorded 5 rupees. Here we record only 4 rupees because the discount amount is not collected, so that should be cancelled. So then even though 3 entries are available, you have to choose only one entry for cancellation of shares. It depends on the pricing method. If it is issued at par, you take the par entry. If it is issued at premium, you take a premium entry. If it is issued at a discount, you take the discount entry. You must choose only one entry which is suitable to the pricing method. Then cancellation is over. We go for the reissue. When the shares are reissued to someone else, here the installment basis is not adapted. So lump sum method is adapted. That means we collected the total amount at a time. So the bank account is debtor, share forfeiture account debit, and to share capital account credit. Here when you reissue the share, it is not reissued at a premium. Usually the shares are reissued at a discount only. So 10 rupees share are issued to someone else for 8 rupees. So you collect the 8 rupees from the shareholder. So 8 rupees bank account is debited 8 rupees. 10 rupees share sold for 8 rupees, 2 rupees discount. The discount is adjusted in the share forfeiture account because that is a profit. It is a profit account. The profit account is reduced to certain extent equal to discount. So 2 rupees is a discount amount is debited to share capital 10 rupees. Bank account 8 rupees, share forfeiture account 2 rupees, total 10 rupees. The same amount is credited in the share capital account. Then now you have to go to the next stage. You have to transfer the net profit available in the share forfeiture account. It is transferred to general reserve account. So how much profit you have? First you take this. In the first entry, share forfeiture account is credited. See, in all the cases, share forfeiture account is credited. Credit amount is a profit. So from the credit amount, you have to deduct the debit amount. For example, in the share forfeiture account, you have the 1000 rupees. In the debit side, here share forfeiture account is debited for 200 rupees. 1000 in the credit side, 200 in the debit side. So remaining net balance, credit balance is 800 rupees. So that 800 rupees must be transferred to general reserve account. It is a net profit that should be transferred. Share forfeiture account debtor 800 to general reserve 800. This entry is this amount is recorded only when all the shares are reissued. That means all the cancelled shares are reissued. For example, you cancelled 100 shares. You reissued all the 100 shares. In this situation only, you have to take the net profit, total net profit, and transfer to general reserve. Suppose you cancelled 100 share, but you reissued 60 shares only. So remaining 40 share are not reissued. In this stage, the transfer amount must be changed. You have to proportionately transfer the share forfeiture profit to the general reserve. So you transfer only 60 shares profit. 60 share profit to general reserve. Remaining 40 share profit must be kept in the share forfeiture account itself. So when you pass this entry, you have to consider whether all the shares are reissued or part of the shares are reissued. All the shares are reissued. Then you take the net profit, total net profit, and transfer to general reserve. If part of the shares are reissued, only proportionate profit share of reissued share must be transferred. I will explain in the problem side. Then you have to now I consider now I consolidate all the journal entries from the base entry to forfeiture up to forfeitures. See this. In the application stage, an application money is received bank account debtor to share application. When the application money is transferred, share application to share capital. These two entries are base entry passed under in case of under subscription and normal subscription. When the excess shares are applications are issued in excess, then additional two entries, share application account data to bank account. When the excess money is adjusted, share application account data to share allotment. In the allotment stage, we bring all the consolidated form issued at par, share allotment account data to share capital. Suppose issued at premium or share allotment account data to share capital to share premium. Issued at discount, share allotment account data to share discount account data to share capital. When the amount is collected, bank account data to share allotment account. In the first call stage, share first call account data to share capital. When the call amount is arrear, bank account data calls in arrear account data to share first call account. When the call amount is collected in advance, the bank account data to share first call account data, so credit to calls in advance. So in the same way, second call, when the call is made, when the share second call account data to share capital, and the call amount is collected, bank account data calls in arrear account data to share capital. I brought all the journal entries so far discussed in the previous 3 videos are consolidated here and presented in one form. So dear student, you memorize these journal entries and equip yourself to pass journal entries regarding the various problem. We will see in the problem side in the next session. Thank you.